In this video, I'm going to talk about the 2026 Medicare Part B premium charges, as well as the additional amount you might need to pay if your income is over a certain level in 2026, as well as a little bit of a surprise that was announced from Medicare. Welcome back. This is episode 228. With the federal government reopened a few weeks ago, we now know what the Medicare Part B premiums and the Medicare Part B premium surcharges will be in 2026. So in this episode, I'd like to dive into that as well as a few other surprises that we were recently given from Medicare. If you want help planning the ideal retirement, then consider reaching out to me. Myself and my team are taking on new clients in 2026, and we offer two different options for working with clients. One is a one-time flat fee financial plan retirement analysis. The other is ongoing wealth management, where we help clients manage their portfolios, taxes, and financial planning for an annual percentage of the portfolios that we're managing. To learn more, head over to retirewithryan.com and click on free assessment. So we now know what Medicare premiums will be in 2026. In case you're not familiar, you're eligible to enroll in Medicare when you turn 65. And though you don't have to enroll when you turn 65, you can decide to delay enrolling in Medicare if you have what's known as creditable coverage through your employer or your spouse's employer. And creditable means health insurance coverage with a company that employs 20 or more people. But for many people, there is a savings in monthly premiums by going on Medicare, but not for all. Now, Medicare has two parts, Part A and Part B. That's original Medicare. Part A covers part of the cost of hospital visits, and Part B covers part of the cost of preventative care. For 2026, the standard Part B premium will be $202.90 per month per individual. So this is the surprise, because this is a 9.7% increase over the Part B premiums for 2025, which are $185. Now that is the largest increase since 2022, when Part B premium increased 15%. So that is a rather large increase. Now there's also a deductible for Part B before your coverage kicks in. It is also increasing about 10% up to $283 in 2026 from $257 in 2025. The Part B premium is deducted automatically from your Social Security payment if you are collecting Social Security. If you're on Medicare but you're not yet collecting Social Security, then you will have to pay your Part B premium separately. I believe this is usually quarterly. I announced a few weeks ago that Social Security had said what the cost of living adjustment is going to be for 2026, and that is 2.8%. This increase in Medicare Part B premiums is obviously a greater percentage than the increase in cost of living adjustment from Social Security. And if you have Social Security benefits, it's possible that the dollar increase for you might be greater. However, if your Social Security benefits are lower, then that might not be the case. You might actually be paying more for Medicare Part B than you're getting in your 2.8% Social Security cost of living adjustment. But let's just say you did have a greater benefit and your Social Security benefit was $3,000 and you're getting that 2.8%. That's an $84 per month increase in 2026. And this is greater than the $18 monthly increase in Medicare Part B premium for 2026, assuming you're just paying the standard Part B premium. And this is why a lot of financial experts, such as myself, are always advocating for retirees to wait at least until full retirement age to begin collecting Social Security, and possibly even longer, because of the fact you're getting a higher benefit and these cost of living adjustments really will add up over time. Now, obviously, if you're already on Social Security, that doesn't really help you, but it's something you have to think about if you're not yet collecting. So going back to Medicare Part A, as I mentioned, this covers part of the cost of a hospital stay. And for most people, there's generally no premium necessary for Medicare Part A. Approximately 99% of people on Medicare Part A don't pay a premium. And you don't pay a premium for Medicare Part A if you or your spouse has worked at least 10 years in the United States, or you sometimes hear it referred to as you paid into Medicare Part A for 40 quarters. So, 4 quarters in a year, you paid in for 40 quarters. If you paid Medicare or your spouse for fewer than 30 quarters, in 2026, you will pay $565 per month for Medicare Part A. And if you paid in for 31 to 39 quarters, then you'll pay $311 per month. However, there is a Part A deductible each time you enter the hospital or within a benefit period. So this cost is going to be $1,736 in 2026. That is an increase from the 2025 deductible of $1,676, about a 3.5% increase. And your benefit period starts the day you're admitted to the hospital and ends when you haven't gotten care for 60 days in a row. This also applies, this same metric applies to skilled nursing facility. And there is no limit on the number of benefit periods you can have in a year. So for inpatient hospital stay, Medicare covers 100% of the first 60 days. That isn't changing. For days 61 to 90, that cost will be $434 a day in 2026, up from $419 in 2025. So you will pay that. Days 91 to 150, you will pay $868 per day, and that's up from $838 in 2025. And then if you are still needing care, you're still in inpatient care over 150 days, you pay all the costs. And these additional costs that you have to pay for Part A is one of the reasons why a lot of people purchase some type of supplemental medical coverage when they're on Medicare, either a Medicare Advantage plan or a Medigap plan, or maybe you have retiree health insurance that could be your supplemental coverage. And Medicare notes on their website, there are some things that aren't covered, such as private duty nursing, television in your room, or a phone in your room. For skilled care, you pay $0 for the first 20 days. Then you would pay $217 per day for days 21 to 100, and that is up from $209.50 in 2025. And then days 101 and beyond, you pay all costs. For home health care, you pay $0 for covered home health care services, and then you'd pay 20% for Medicare approved amount for durable medical equipment like wheelchairs, walkers, hospital beds, and other equipment. So getting back to Medicare Part B, you may also have to pay a higher Part B premium than what I mentioned before, than the $202.90. So this is based on your most recently filed tax return. This is what Medicare and Social Security use to determine what your Part B premium will be. So essentially it's your 2024 income is what's determining your Medicare Part B for 2026 if you're on Medicare or if you're going on it. And this additional amount is called IRMAA, an income-related monthly adjustment amount. About 7% of people who are on Medicare are subject to IRMAA. And as I said, it's based on your most recently filed tax return, so there's about a 2-year lag. For 2026, the IRMAA adjustment begins for single filers or married filing separately who had a modified adjusted gross income of $109,000 or greater in 2024. And for people that are married filing jointly, if their modified adjusted gross income was double that number, $218,000 in 2024. So just to give some perspective, for the Medicare Part B premiums in 2025, these numbers were $106,000 for single or married filing separately and $212,000 for married filing jointly. So a slight increase over what was used for people paying Medicare Part B in 2025, and that was based on the 2023 tax return. And with IRMAA, there are modified adjusted gross income brackets for this. So that's just the initial bracket. So for that initial bracket, if you're over the $109,000 or the $218,000 as a joint filer, you're going to pay $284.10 a month per person for your Part B premium, up from $202.90. The next bracket starts for $137,000 modified adjusted gross income for a single filer, or double that, $274,000 for someone married filing jointly. And that premium is going to be $405.80 per month. So there's more brackets than that, but just to give you some perspective on what these IRMAA charges are. So they can add up. I mean, essentially, you make it to that second bracket, you're paying double, either as an individual or doubled as a married couple. So that's a lot more for your Medicare Part B premium. Medicare will be sending out letters very soon in early December, letting you know what your exact premium will be for 2026. You can also log in at medicare.gov and you can see what your projected premium will be. So if you are going on Medicare and you see that you're going to be paying more for your Medicare Part B premium, you're subject to this IRMAA surcharge, then you can actually appeal that surcharge if you feel that you qualify for one of the 8 reasons to appeal. You can't just appeal it because you're unhappy about it. Certainly nobody wants to pay this, but there are 8 life-changing reasons that you could file an appeal. And you would do this by completing a form called SSA.44. So those reasons are work stoppage or work reduction. This means you or your spouse stopped working or significantly reduced your work hours, often due to retirement. So if you're retiring this year, this could be a reason that you could appeal because your income is going to be lower in the future. Marriage, your filing status changed because you're recently married. Divorce or annulment, your legal marriage ended, or you will not file a joint tax return with your former spouse for the year in question. Death of a spouse, your spouse died, resulting in a reduction of your household income. Loss of income-producing property, you experience an involuntary loss of property due to natural disaster, fire, or fraud, not a voluntary sale, unfortunately, but this resulted in a decrease in income. Loss of pension income, you experience a scheduled cessation, termination, or reorganization of a pension plan, or employer settlement payment. You received a one-time settlement payment from an employer due to a business closure, bankruptcy, or reorganization, which resulted in inflated income for that specific tax year, but does not recognize your ongoing income or reflect your ongoing income. Now, SSA recommends that you file your appeal within 60 days of receiving your notice. You can log into your Social Security account and submit this online. If you go to ssa.gov, you can log in and submit this appeal right there, or you can fax it or mail it in. But the point is to make sure that if you feel this is an error because of one of these reasons, or you amended your tax return, then you want to make sure you jump on this quickly because it can take a little while for this to be adjusted. So even in retirement, you need to keep an eye on your income as it relates to your additional Part B premium, this IRMAA surcharge. If you take a large withdrawal from a retirement account, if it's a non-Roth account, that's taxable income. So that additional withdrawal plus Social Security or other income could push you into a higher IRMAA bracket. If you realize a large capital gain in a taxable account, like you have a stock that you've made a lot of money on, you want to sell it, and now you trigger this large capital gain, well, that's additional income. Let's say you sell an investment property, or you sell your primary residence and you have a capital gain that exceeds the $250,000 primary residence exclusion per individual, then that could be other income too. So you really just have to keep in mind what your income is going to be and things you're doing that could trigger IRMAA. It's not the worst thing in the world if you have to pay it. Maybe it's something you have to do to, improve your portfolio or change things around that's going to be better in the long term. But you want to just be mindful of that because maybe you can go right up to the limit without going over, or maybe right up to one bracket but not going over the next, so that you're able to make these changes, but you're not going to be subject to this massive additional Part B premium for the next 12 months. Now, remembering it is only 12 months, so if your income does change, if you can't appeal it, then it will adjust in future years. But keep an eye on that because there is a 2-year lag, in that happening. This is something we try to keep an eye on for our clients that are letting us know about their income and what's happening. We try to keep an eye on this to help minimize this if possible. So I hope this gives you some more information about what Medicare is going to look like in 2026 and some things that you could do if you find yourself paying additional Part B premium for 2026, or maybe thinking about how you can structure your income for years beyond that. As always, if you have a listener question you want to have considered for a future episode, head over to retirewithryan.com and click on Ask a Question. Have a great week, and I look forward to talking to you next Tuesday. Take care.